So today we're going to be talking about Google stock because Google is on fire right now. The stock is performing amazing. And then I'll also switch to the very tricky question of when is the right time to sell Google, because obviously we're sitting on some significant gains right now. And it's kind of into that old age problem of when do you kind of let go of this? Is there a time where you just keep your winners keep winning? Or at the end of the day, we're all here to make money? Is the time where it's maybe a little bit of a rich valuation? Is it time to move away from it? So I'll be talking about that all today, so I hope it's all useful for you. But yeah, Google, what a performer. The last year, the stock is up 134%. And this has been a pretty significant performer for me. It was around about 2 years ago now that I was saying, look, I really like Google. I was banging the table going, yeah, this is a great opportunity to go buy Google at the moment. And I was attempting to make Google my number one position in my portfolio. I got it to number 3, which I guess is still pretty good going, but I would have loved it to be my number one holding. But at number 3, it's still done some significant lifting for me in my portfolio. And really that kind of 2024, 2025 time, stock was trading sideways for a good year-ish. I think it even was down 20% at one point. And nobody really wanted to own Google during that time frame. I was there saying, look, I think this is a great opportunity. I think at one point, I even referred to it as being like the best big tech opportunity or the Mag 7 opportunity since we had the meta dip in 2022. I said, look, this is a fantastic time to go buy Google at 17 forward times earnings. People did not want to buy Google at 17 forward times earnings. And, there's that negativity going on during that time frame. I mean, nothing major. People saying about, are they going to carry on the partnership to be the main search engine of Apple? And there was also the cases around, is Google going to get split up, which was never going to happen. A few people were saying they were behind in like the AI race, which that can change so quickly. We were so early on in that stage, and Google aren't going to just sit there and kind of be happy with the product. They're always going to keep reinvesting into it. And then very quickly within a 12 months time period, look how fast that's all changed. And I remember making these videos on Google, and there was so much negativity out there. Always, I say all the time, people just follow the share prices. They don't look at the financials, and they just let the share price take over their emotions and not actually look from a level head of like, is this an opportunity to buy a great company? And you know me, have I kept any receipts? You know me, I always keep a few receipts on this. And the amount of comments are like, Google's finished and it's so far behind in the AI race. The standout one for me though, I don't even know where this came from. Our old mate Andy P. I've not heard from him for a long time now. I think the Hims and Hers finished him off, but if it didn't, I think this Google comment might have finished him off. Jacob, don't get carried away with Google Cloud. Microsoft and Amazon are the leaders by a country mile. So Andy was expecting them just to roll over with it. I mean, if jumping ahead a little bit, if we do look at Google's earnings and that cloud growth at the moment, I think certainly it's not rolling over. They've just managed to grow those Google Cloud revenues at 63%, Andy. So hope you're doing all right out there. But yeah, let's get on to this Google. So, I mean, overall, like the big thing that's really changed with Google is that quite often when people do invest in, they always kind of think that, it's all about revenue growth and profit growth, and that's what drives your return. But quite often, and this is what when I read this book, 100 Baggers, if you've not read that one, it's a great investing book. And it goes on to say, like, and it's a great point, that quite often it's not just the profit and revenue growth in the business that helps a company do well. And obviously during this time frame, Google has had great profit growth and revenue growth. But the thing that will move the stock price quite significantly is just market sentiment around the stock. And the reason why Google has done so well in this last year is not because the financials have done amazing, which they have done, but it's because a year ago, nobody wanted to own it. It was 17 forward times earnings, and now people are willing to pay 30 times earnings for it. And that's always what you got to remember with stocks, is sentiment can be a big driver of the returns. And that's why I always like looking at stocks that have, negative sentiment, that are just short-term issues, and they'll come out on top. I like those opportunities, and Google was exactly that not too long ago. But getting on to the earnings themselves, you can see here EPS was a significant beat by double, although there was a one-time benefit in that time frame, which kind of skews the profit there. So we're going to use operating income for this earnings when we get around to it. Revenue growth of 21%, which is very good. That is a big acceleration from where they have been. And if they are going to continue that growth, that does make a bit of a difference, because I forecast going forward 17% revenue growth. But in the next quarter, 18%, the quarter after 18%. So if they maintain, and this is also an exciting thing that's going on with Google right now, is those, that growth is re-accelerating, and that gets everyone excited. But that does make a bit difference to my numbers if they do maintain this higher growth number, because I didn't think they would grow this much, but they're absolutely smashing it at the moment. Now, going through the numbers here, you can see here that we talked about revenue up 22% or 19% on a constant currency basis. Google services increased 16%, led by 19% in Google search and other, 19% in Google subscription platforms, and 11% on YouTube ads. So even then, part of them areas of the business was still doing quite well. Google Cloud. I mean, this was one of the whole reasons I was buying Google a year ago, is that was growing so fast, but the re-acceleration that's gone on there is crazy. And the thing is, like, the levels of profitability that cloud throws off, it's more than like the other parts of the businesses. So, you're going to see profit grow even faster than revenue, which is, really exciting as well. If you look at the operating income, which is the key one to use this time because of the one-time benefit that they have, you can see that increased 30%, with operating margin expanding 2 basis points as well. That's fantastic. But you can see that over income, that's why the EPS was such a big beat. They did have a net gain of only 37 billion as a result of unrealized gains on our non-marketable equity securities. Net income was up 81%. Yeah, we can't use those numbers at all. The company announced a 5% increase to its dividend. Like, hey, 5%, that's lovely. And then you go look at Google and you go, it's so 0.22% dividend yield. So we're probably getting like a 0.23% dividend now. Yeah, we were all going to be retiring now after that dividend increase, aren't we? So yeah, I guess, we're getting a bit more money. Let's not knock it too much, eh? So look at some information here as well. They said that the queries that are at all-time high and 19% revenue growth. Google Cloud revenues at 63%, with a backlog doubling quarter over quarter to 460 billion. Doubling in a quarter to 460 billion. This was our strongest quarter ever for our consumer AI plans, driven by the Gemini app. Overall, the number of paid subscriptions has now reached 350 million. With YouTube and Google One being the key drivers, Gemini Enterprise has great momentum with 40% quarter-on-quarter growth in paid monthly active users. And finally, Waymo passed 500,000 fully autonomous rides in a week. Whew. Tell you what, Tesla would be happy to do that in a year. Sorry, this isn't supposed to be an anti-Tesla video for once. But yeah, that's incredible, isn't it? And for me, this is the first time I'm looking at this and going, they are actually really benefiting from AI. Like, this is you are kind of seeing some of the numbers now coming through going like, these are good. These are actually really good. And towards the end of the video, I'll actually get on about some AI things as well, and my opinion around that. Looking at operating income, obviously, like we said, the key thing that we need to be looking at, because of the EPS numbers being a bit all over the place with that one-time benefit they had. So Google services, great growth there. Google Cloud, I mean, look at that, 3 times the profitability. And that's the thing, is that that's growing so fast. And then if that revenue keeps growing the way that they are doing, the profit keeps growing the way that they are doing, this is going to be a big thing where that profit could really grow at very good rates at the moment. And I'm like, there's a key driver to keep, this is probably going better than what I originally thought it was going to go. So just keep an eye on that right there at the moment. One thing to point out is obviously the long-term debt did have a pretty significant jump, which it's in the grand scheme of things, that's nothing for the balance sheet that Google has. But I've just been very surprised to see some of these Mag 7 stocks basically say, we don't give a crap about our balance sheet that much anymore. Maybe not, that's a bit of an extreme statement, but they're certainly not keeping it as pristine as what they were previously doing, is what I would say. Jumping across to the conference call or the webcast, and great platform for this earnings season is Seeking Alpha. Seeking Alpha basically gets the transcripts for you from these conference calls, and it uses AI to pick out the really important bits to save you scrolling through all the transcripts. Great feature. I use Seeking Alpha all the time for earning season. If you do want to join, guys, link in the description, and got a discount code for Seeking Alpha. It's a great platform. And looking through the conference call right here, you can see here that they also updated their full year capex range again. I mean, the market threw a hissy fit when they did, the capex spends for 2026, and now they're up in it. I mean, I'm surprised they didn't send Google down. But they said here that they are updating their full year 2026 capex guidance to 180 billion. To 190 billion, up from the previous estimate of 175 to 185. And look at this for 2027. We expect our 2027 capex to significantly increase compared to 2026. I mean, the market's already having hissy fits about this capex spend, and I mean, even I think a few of us are looking around going, look at how much they're spending here, like 180 billion in a year, and then you're saying significantly. I mean, what's significantly? At least 50%. So, I mean, you're up to the point of view where, some of these companies here are going to be towards nearly 250 billion in capex in a year for all these investments that they're making. I looked at that and I went, I am definitely making sure I am holding on to them AMD shares that I own for a little bit longer yet, if this is going to be the case. I was supposed to put this when it was on about the cloud backlog comments, saying about how much it did increase at the moment. So they said that they will recognize a lot of this in 2027. So looks like Google's already setting up for a good 2027 as well. But yeah, looking at what Google is driving the benefit from the cloud at the moment, and looking at those capex spends at the moment, I was looking at that thinking, you know what, I need to make sure I keep hold of this, my AMD position. And out of all this, I was kind of already starting to think about other companies in this conference call. I was thinking about, I've been sitting there for a while about Nvidia and going, look at Nvidia's numbers, and the stock's been trading sideways for a year. I mean, 40 times earnings, but on a forward PE, like Nvidia's something like 20 something times earnings. I'm like, that's not too bad for Nvidia. I've been a bit iffy about buying Nvidia because I already own AMD, and I'm like, I don't know if that's a bit just too much of a crossover. And then I'm thinking, well, is there someone else in this kind of space that might be like an opportunity that would benefit from this AI situation? And I think a few people have recently looking at the likes of Micron. But I mean, Micron is I'm not going to get in Micron in today's video because of everyone kind of is looking at Micron and going, okay, is this a one-time benefit and a cycle like you normally go through? Or are you actually going to benefit for a very long time here, and then do we re-rate your shares from where you're at? And yeah, I'm turning this into a bit of an AI video at the moment, but I'm certainly looking at the moment and thinking, I've only got AMD in this portfolio right now, and I'm thinking maybe there needs to be another one in my portfolio after doing those Google earnings. But getting on to the title of the video now of Google, it's like, when do I plan on selling my shares in Google? And the answer is that I am already actively selling some shares in Google. The thing is, I actually sell my position in Google, and then because of the run that it keeps going on, it keeps increasing my allocation to where it was at previously after I sell it. So the position sizing I'm trying to get down, but it's been on such a run, it keeps really maintaining its position in my portfolio. But I'm actively selling. Purely one of the reasons why I'm actively selling Google right now is just because I think that the market's in love with it, and I always just go against the market. If the market hates it, I like it more. If the market loves the stock, I hate it, and then I sell it off. So just because there seems to be so much love around Google right now, the sentiment to me feels like it could be a little bit stretched. And then obviously you look at the valuation. 30 times earnings is historically about right for Google. So I am naturally just taking some off from that point of view. When I look at the numbers, I'm putting in 13, 15, 17% revenue growth in 32, 34, 36 profit margin, 20 times earnings, the market average, and there's not really that much upside. And I can always see the market at some point, whatever the case is, it goes, oh, the DOJ is looking at splitting up Google Gemini from the the rest of the Alphabet platform panic and the stock will drop. Day will come at some point, whenever it will be, and then it might throw it back down to 20 times earnings, and then you probably wish you maybe sold some shares. But I do think Google should trade at a very fair valuation of something like 30 times earnings, and at 30 times earnings, you do have some upside there still at the moment, somewhere between a 55 to 76% upside. I think you could argue the case with how fast that Google Cloud is growing. Maybe those profit margins do expand to something like a 40% profit margin potentially. And then all of a sudden you're like, yeah, there's 95% upside in this, so it might still be worth holding Google because of that upside. That if they do really keep expanding those profit margins with the cloud platform, there could still be really good upside here. And that's a summary of where I'm at with Google. Is that the market seems to love it, so I'm naturally being a bit cautious now about it, and that justifies and being pretty fairly historic valuation to where it's normally at. Signals to me it's the right time to take some capital off the position, and that's what I've been doing. But I've seen a few people that have kind of like completely sold out of financial education, that have completely sold out of their Google position, which I think is very risky considering how early on we are in the AI spend, and also that Google Cloud can really lift those profit margins. And if that does happen, you can see here the upside could still be pretty nice on it. So I'm just in a position where I just release a bit of capital but still keep a position, and either way I kind of, I'm in a way that I will win. Then either way, if the stock goes down and the market falls out of love with it, well, I locked in some profit and then I can go buy again cheaper. And if the stock keeps going up, I still keep the long run where I get the rewards from, buying the stock when it was so cheap. But ultimately, I will just continue to trim away at my position. And I'd like to say that from where I am maybe at the start of the year to where I am towards the end of the year, I'd probably say maybe not end of the year, maybe the next kind of 12 months ish. Maybe I'd want to be towards maybe half or something like that of the allocation that I do have at the moment. And like I said, by then, I've locked in profit. We're here to make money, and I've done that, and I think I'm locking it in at a fair valuation. But at the same time, if they continue to benefit, if the market stays in love with it, and if the cloud keeps growing at the rates that it is, and the profit margins keep expanding how they are doing, then there could still be upside. And that's just where I always kind of want to position myself, really. It's kind of like sitting on the fence, but sometimes in this game, you kind of got to sit on the fence that you take advantage of. At the end of the day, I'm not in control of where the market's sending this stock. I have no control on what the market is going to click the buy button next week, month, year, or if it's going to click the sell button. And I've just got to kind of position myself where I do well in both situations, realistically. It's the same as when I was buying Google, when it was, in my opinion, the best opportunity in the Mag 7 stock since the meta dip in 2022. I had to position myself where I think it's great value, and I built it up into a big position, but I've also got to bear in mind that this could still drop another 10-20%. And if that does drop another 10-20%, I can continue to buy the stock and get a better average. And it's one of those, you're trying to position yourself where, you want to get a good position in case this is the bottom, but also you're making sure you've got a good position in case it isn't the bottom. And ultimately, that tactic never got Google to my number one position, which I could go, I would have loved it to be my number one position. However, it got me into a position where it's my number 3 position. And looking back now, should I be that angry that it's my number 3 position? And you look at the gains that we have. And that's always the thing with the market. You're always trying to get yourself in a healthy way where you can benefit from whatever situation you're in. It's just that every so often in the market, there'll be times where you do need to be that little bit more ballsy and go a bit deep when you go, right, this value is just, way too much now. For example, if Google was 13 forward times earning, then that's where you probably go, right, this is ballsy where I really need to go buy, when obviously I was buying at 17 forward times earnings. And there's also that element of let's say, Google's only a 4.6 trillion market cap right now. And if, let's say, next week Google goes to an 8 trillion market cap, right? I'm not going to be sitting here going, I'm only slightly taking the profit off the table. If Google doubles up next week, I'm not going to be sat there going, yeah, I'm only just slightly trimming. It all changes. Then I have to go, right, Now we're talking where I might have to sell half my position out on Google because that run is crazy. And there's them elements where you have to be a bit more ballsy when situations happen. But ultimately, like in this game, in my opinion, you're always trying to benefit from whatever situation you go in, which you never really know. None of us are fortune tellers, even though on the internet and on the stock market and on YouTube and on X, people act like they've got a crystal ball. They haven't, and you know, I'm not going to bullcrap you in any other way. I have no idea. But what I'll try and say is like what I try positioning to be okay with whatever happens. So yeah, that's Google. Where we're at with Google. Went a bit of an AI talk as well, and then also when I could potentially sell some Google, which I am actively doing, but I'm not. This isn't a position that I will ever completely close out of realistically going forward either. So that's everything. Hope you enjoyed it. See you in a bit.